What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 5 dividend stocks that I'm closely watching. These are some of them that I sold and some of them that I rebought. These are very popular dividend stocks. And by the way, we're at 13,200 subscribers. You guys are amazing. I'm going to continue to post videos for you guys because you're amazing. And you guys have been very active on this channel. You've been smashing that like button. You've been commenting. I'm going to keep on posting videos for you guys just for that reason. So I cannot wait till I graduate in August. One big thing, I'm going to take a month off from studying for board. So one thing I want to do is learn and try to master options trading. And 2, I need a lot more YouTube collaborations with people. People want me to do YouTube collaborations. I promised people I would be on their channel, and I'll keep you posted on that. So I'm going to do a quick stock analysis and dividend stock analysis on these dividend stocks. I'm going to explain to you why I'm looking at them. We're going to go over some revenue trends, and these are high yield dividend stocks. Some of these are dividend growth stocks, but I'm still watching them. So let's check these dividend stocks out right now. First one I'm going to go over is Energy Transfer. It's sitting at $12.95. It has an average volume of 8.66 million. The market cap is 40.10 billion US dollars. And by the way, I own these guys. G range is 937 to 1367. Its day range is 1286 to 1301. And its previous close was 1284. So what excites me about these guys? I have done reviews on these guys as a company, but I'm going to explain to you basically their revenue and their revamping of their dividend. Kind of excites me. I'm going to hold on to these guys and probably buy more shares. I have them on M1 Finance. I'm pretty sure I'm at 100 plus shares in these guys. So let's go over their revenue trends and dividend history. And with their revenue trends, this is what's very attractive about these guys. And they're cheap and they're a high yielder. 2016 annually in millions US dollars, 31,792. 2017, 40,523. 2018, 54,087. 2019, 54,213. 2020, 38,954. Huge dip. You can blame the pandemic. 2021, 67,417. And 2022, 89,876. That is a huge increase in revenue. And let's check out their dividend history now. Let's start in 2018. They were 31 cents, very stagnant at 31 cents. And then 2020, they had a dividend cut at 15 cents. And then 2022, they tried to revamp it a little bit, jumped to 18 cents. And then they jumped to 20 cents and 23 cents. And now they're back at 31 cents. So their payout ratio is a little bit high per Zacks. Number of dividend increases in the last 5 years is 6. So if you bought one share, you made 123 with a 9.58% dividend yield. So, based on some readings that I saw, I'm hoping that they cut their dividend. I hope they increase their dividend. And the thing is, diversification is important, and I kind of like these guys. I sold them. I played around with them, and I'm going to hold on to them for right now and still closely watch them and enjoy that dividend income, that high yield dividend income. Now let's check the next dividend stock. Altria is another one that I sold. I am a little iffy on them, and I'm going to explain to you why, just looking at a few things. So they're sitting at 45.64, a dividend yield of 8.24%. That's high, and I'm going to go over a few things with that. The PE ratio is 14.67. Average volume 8.32 million. The market cap is 81.47 billion US dollars. Year range is 40.35 to 48.11. Day range is 44.95 to 45.69. Its previous close is 44.95. Now I'm going to jump to the revenue trends and dividend history. And I'm going to go over their revenue trends. They have a tradition of hiking their dividend. But the one thing that really concerns me is their revenue trends. So this is annually in millions US dollars. 2016, 25,744. 2017, 25,576. 2018, 25,324. 2019, 25,110. 2020, 26,153. 2021, 26,013. And then 2022, 25,096. So one thing that they're kind of revamping, they're looking at the Mary Jane business and the vaping. But the one thing that concerns me, and this is why I really had to think this through, and this is painful to sell these guys, but first off, when you look at insurance, they start cotinine testing. So cotinine is basically the byproduct of nicotine. So that's a metabolite of that. If you are applying for insurance or try to get insurance benefits, sometimes you can get a discount or have to pay more. So if you test negative for cotinine, the metabolite, that's a good thing. You get possibly a discount in your insurance. But if you test positive for that, your insurance rate gets up. And I can tell you a lot of employers in the hospitals, they do not want you taking any nicotine products whatsoever. So that's one thing to be aware of. I don't know if they're going to be too aggressive. I know certain hospitals will randomly drug test, and they're more concerned about, narcotics and stuff and the other stuff. But I don't know how they are with cotinine, to be honest with you, or nicotine as a byproduct. But that's an issue with insurance. So I'm going to jump to their dividend history. So here's my concern, and I'm going to go over this. So I'm going to go over their dividend history. 2011, 38 cents to 41 cents. 2012, it cracked 44 cents. 2013, it cracked 48 cents. 2014, it cracked 52 cents. 2015, it cracked 57 cents. 2016, it cracked 61 cents. And then 66 cents. 2018, it cracked 70 cents. 2019, it cracked 80 cents. 2020, it cracked 84 cents. And then it cracked, let's just jump to 2023, it cracked 94 cents. So their payout ratio is 77%. The dividend increases in the last 5 years is 5. Dividend growth in 5 years is 3.84%. So if you bought one share, you made $3.76 with an 8.36% dividend yield. So the thing is, people are trying to encourage smoking to be banned and to stop smoking and all this. The government involvement. There's a big issue with that Juul vaping. So the one thing that's going against these guys is, people are more knowledgeable that smoking is bad. People are going to smoke and they don't care. That's the unfortunate thing with Altria. And, I don't know if their dividend is sustainable in the long run because I don't like their revenue trends. Their revenue really hasn't jumped up. So they're at a big risk unless they start racking up some serious money. If they start racking up some serious money, maybe I'll buy them and rebuy them, but I don't know how sustainable that dividend is going to be with the revenue trends. So let's check out the next dividend stock. So the next one is Church & Dwight, like Arm & Hammer. So they're sitting at 97.80. Dividend yield of 1.11%. PE ratio of 58.43. The average volume 1.68 million. Market cap is 23.89 billion US dollars. Tier range is 70.16 to 152. Day range is 97.11 to 98.52. And its previous close was 98.29. So they have some beautiful attributes. One, they're beating the S&P in the past 5 years. Two, they're a big time company. Three, I'm going to go over their revenue trends. And with their revenue trends, it has consistently gone up revenue-wise, which is attractive. 2016, $3,493. This is annually in millions US dollars. 2017, $3,776. 2018, $4,145. 2019, $4,357. 2020, $4,895. 2021, $5,190. 2022, $5,375. So there is an increase in revenue, which is beautiful. Now let's check out their dividend history. I'm going to start in 2011. It was 17 cents. It jumped to 24 cents. 2013, it jumped to 28 cents. 2014, it jumped to 31 cents. 2015, 34 cents. 2016, 36 cents. And then you see a stock split. So these guys do have a stock split. History, 18 cents. 19 cents 2022. You guys can correct me if I'm wrong, but I'm pretty sure that is a stock split. 22 cents to 23 cents, 2020 24 cents, 2021 25 cents, 2022 26 cents, and 2023 27 cents. They have a low payout ratio at 36%. Number of dividend increases the last 5 years is 5. Dividend growth in 5 years is 4.87%. This is what has me a little turned off, and I'm closely watching. That's slow dividend growth in 5 years, 4.87%. So if you bought one share, you made 109 with a 1.11% dividend yield. That's a low dividend yield, and it's a low and slow dividend growth. So that's what turns me off a little bit, but I'm closely watching still. Let's check out the next dividend stock. Next is Premier Financial Corp. I own this one. It's sitting at 1708, a dividend yield of 7.26%, a low PE ratio of 6.49, average volume 201.31K. The market cap is 610.24 million US dollars. Year range is 1360 to 3080. Day range is 1677 to 1717. Previous close 1692. So the one thing is these guys are really smaller as a financial sector stock. So that's one thing that I own these guys, but they're small and they're discussing expansion talks. But I'm going to go over some revenue trends and their dividend yield. But I'm still holding on to these guys for right now. So let's go over that. And this is why I'm holding on to these guys right now and love their revenue trends. So this is annually in millions US dollars. 2016, 121, 2017, 148, 2018, 163, 2019, 186, 2020, 317, 2021, 322, 2022, 339. So that revenue trend is very attractive for me. This is why I'm holding on to them. And I will jump to their dividend history. So here's their dividend growth. This is fantastic. But again, there's a little bit of a high yield. So 2020, it was 22 cents. 2021, 24 cents to 26 cents, 27 cents. 2021, 28 cents. Then it cracked 30 cents in 2022, and then 31 cents in 2023. So their payout ratio is 45%. Number of dividend increases the last 5 years is 9. Dividend growth in 5 years is 14.68. So if you bought one share, you made 124 with a 7.33% dividend yield. So that's one thing that is very attractive with these guys, and this is why I'm holding on to them. So we're going to jump to the last dividend stock. And the final dividend stock that I still always closely watch, I'm not a big fan of these guys, is AGNC Investment Corp. It is sitting at $9.95. Average volume of 9.79 million. Market cap is 5.93 billion US dollars. Its year range is 730 to 1289. Day range was 989 to 1011, and its previous close was 997. So the thing about these guys, which is very attractive, is that they are a mortgage-backed real estate investment trust. But they're not even close to Arbor Realty Trust. They are a high-yield dividend stock, and they have decreased in price per share over time, which really turns me off. Now, a few people, tried to discuss with Walgreens why I own them. Walgreens is something that, is an in-demand company. Now, these guys, I don't see them as much in demand. And the other thing with AGNC is their revenue trends and dividend history, which really turn me off, which is very inconsistent. And that really turns me off. So 2016, check this out. Annually, in millions US dollars, 1,321, 2017, 1,293, 2018, 1,949, 2019, 2,842, 2020, 1,519, 2021, 1,361, and 2022, 1,590. There's a lot of inconsistency with their revenue, and that really turns me off with these guys. And I'm going to go over their dividend trends, which is a bigger turnoff, but I've still always closely watched them to see if there's a rebound in the future because they distribute monthly dividends. And remember, a real estate investment trust, 90% of what they make have to go back to investors. That's the rule of a real estate investment trust. So let's check that out. So there's a lot of people that love to praise AGNC. I'm going to tell you why I'm not a fan of AGNC. So let's start with their dividend history, their monthly dividend stock. 2015, 22 cents. And then they decreased their dividend to 20 cents. And then 2016, they decreased it to 18 cents. And it's still 18. And then guess what? They decreased it to 16 cents in 2019, to 12 cents in 2020. And it still hasn't increased its dividend. It has a payout ratio of 46%. Number of dividend increases in the last 5 years is 0. Dividend growth in 5 years is negative 9.23%. So if you bought one share, you made 144 with a 14.44% dividend yield. There's a major difference with Arbor Realty Trust and these guys. And Arbor Realty Trust has the revenue and it has the growth, and it actually has beaten the S&P sometimes. It's a little neck and neck with the S&P in the past 5 years. These guys have decreased in price per share. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Hope you enjoyed this video. Make sure you smash that like button. And if you are new to this YouTube channel, you got to subscribe. I will have a video for you guys tomorrow. You guys take care and have a great Tuesday. So as a reminder, this is a disclaimer notice. This is not financial advice for entertainment purposes only. Disclaimer in the description. Always consult with a financial advisor regarding financial advice. I do not give financial advice. I will tell you I do not give financial advice. There's always a risk regarding investing and you can lose a lot of money. My channel is for entertainment purposes only, and I reveal to you my dividend investing journey. Do not take this with any form of financial advice in these videos. I hope you enjoy my video, and make sure you subscribe and hit the notification bell so you don't miss future videos. Thank you so much for watching this.